Hey everyone, welcome to CoveredCall ETF Investing. I'm Jordan, and this is your central hub for deep CoveredCall ETF data. And in today's video, we're going to be discussing, theorizing, speculating about the brand new CoveredCall ETFs that Global X Canada, formerly Horizons ETFs, is coming out with on May 22nd. So let's get into it. All right, everybody. Before we jump into these new funds that we're going to talk about, just a last reminder, last chance to get in on the live Zoom meetup that I'm going to be hosting on Saturday, May 18th at 9 a.m. Pacific Standard Time. You got to be a paid Patreon member to join the live meetup. It's going to be an opportunity to get to obviously meet me, but also I think even more importantly, other income investors, hear from them, hear from the collective wisdom of the community of how people use these funds. We'll be discussing strategy. We'll talk about, I'm sure, the CoveredCall ETF ALLSTAR tracker. We'll go through some stats, no doubt about that. So if you're interested in that, we're almost actually at capacity. So you can head over onto my Patreon page. It'll be in the description below or the first comment that you see down below. So again, almost at capacity. If you're interested, come over and join, get access to the tracker and some other goodies in there as well. All right, so let's move on to the main meat and potatoes of this video. As of May 1st, Horizons ETFs is no longer. Their parent company, Mirae Asset Management, has wanted to put Horizons ETFs and Global X, which we normally more associate that with the American side of CoveredCall ETFs, put it all under one umbrella to simply just be Global X. Or in this case, I'll probably more or less refer to it as Global X Canada and Global X USA, just to keep it separate, right? So if you're interested in the XYLDs, the QYLDs, the RYLDs of the world, I'll just refer to that stuff as Global X USA, and everything else as Global X Canada. So we can see that here, Global X Canada, they're at the Toronto Stock Exchange celebrating the launch of the rebranding. And to go along with the launch of the rebranding, which I thought was important. I had another video planned actually for this, but I think this was very timely, and I think we need to discuss what a bunch of these new funds are all about. And so on May 22nd, they, being Global X Canada, they are launching a bevy of brand new ETFs, but we're only going to focus on 6, being CoveredCall ETF related. The first one, which I have been waiting for what feels like forever, is a developed markets CoveredCall ETF and an emerging markets CoveredCall ETF. This is so important because it affects a fund that I am really interested in. It's been on my watch list for forever. If you follow me on Blossom, you'll most likely know what these two funds, well, one of those two funds are. One being EQCL, and I have Base. Base I always talk about in the tracker videos, but EQCL has been there for a long time. I know I've talked about it before, that I always felt like EQCL here, it has a bunch of CoveredCall ETF funds in it, like the S&P 500, the TSX 60, and the NASDAQ 100. Now these have also gone through some name changes. So this being USCC, which used to be the US large cap CoveredCall ETF. The TSX 60 here used to be the Canadian large cap CoveredCall ETF. The NASDAQ 100, I think that one has stayed the same, but I can even show you what I mean as an example. USCC, Global X, S&P 500 CoveredCall ETF. EQCL being all asset allocation, it has this exposure to developed markets and emerging markets, but these aren't CoveredCall ETFs. They are more growth-centric ETFs that basically reinvest their dividends into themselves. But again, no CoveredCall portion on it, which has led to a much smaller yield for EQCL, still, in my opinion, still a great yield, nothing wrong with it. Anything above 10%, I am thrilled with. That is what this channel focuses on. But compared to other ones, other leverage covered call ETFs by Global X, formerly Horizons ETFs, is more like 13%, 14%, 15%, especially when it deals with the indexes like the S&P 500 and the TSX 60 and the NASDAQ 100. EQCL in May here actually just raised its distribution, so it took it from maybe the high 10% up to about 11.5%. So that's actually where that yield started with when it launched late last year. So heading back over here, MSCI just stands for Morgan Stanley Capital Investment. EAFE stands for Europe. Australia, Asia, Far East. So Far East being probably like Japan and Taiwan. And then, of course, we've got emerging markets, which you're probably going to find India in there, maybe Brazil. But it excludes, I believe, or sorry, no, it doesn't exclude. Developed markets excludes America and Canada, just for your information. So anything outside of North America. Not sure if Mexico might, I guess, be in emerging markets. Anyway, the prospectus, if we click on it, CDAR is actually down, so we can't actually read. I did read through this prior to making this video, and it actually doesn't, of course, with a prospectus, it doesn't actually show the holdings or what countries these ETFs are going to be invested in. But I mean, it's a pretty good guess what we can expect. So then we got Global X short-term government bond premium yield ETF called PAYS. Now, I actually thought Global X had something like this already, being the SPAY, Global X short-term U.S. Treasury premium yield ETF. So again, until this thing comes out, not really sure what the difference is going to be. Maybe it'll just be maybe it'll just be leverage and not have no cover calls on it whatsoever. Again, this is a video about speculating, which is fun to do. So again, until May 22nd, we can only just guess. And then we got EQCC, which looks like it's going to be the non-leverage version of, going back over here, of EQCL, which would make a ton of sense. EQCL is not based, well, I was going to say it's not based off of anything, but now that I think about it, it actually kind of is. GRCC is the non-leverage version of EQCL. Shoot, I'm just realizing that now. All right, guys, I just decided to bring up the Global X GRCC because I just realized it actually just while filming this. GRCC is the Growth Asset Allocation Covered Call ETF, whereas, of course, EQCL, all asset allocation. But, I mean, I guess it holds basically the same stuff, but just different weightings. The only difference is you get this sort of midterm U.S. Treasuries in there. And yeah, just I guess different ways. I don't see any NASDAQ in here unless I'm missing. No, oh, there is a NASDAQ. Okay, so so I don't know what to make of that all of a sudden, all right, so okay, this is like in real time. I had two scenarios that I thought would happen with EQCL, but now that okay, so I'll go through the scenarios of what I thought would happen with EQCL. Okay, this is actually kind of fun because I'm dissecting this in real time as I watch as this plays out. But okay, so here's what I think was most likely going to happen. EQCC was going to get put into EQCL. They would take out those emerging market and developed market growth, dividend ETFs with the dividends that reinvest in the non-covered call emerging markets and covered call and developed markets ETFs. And then they would just put in EQCC. And that very well is probably most likely going to happen. Why not? They boot out all those other funds and put this one in. I guess what I'm thinking of is it'll just have the same asset allocations as EQCL, right? Because it's the leverage. So yeah, I guess that would make sense. It'll still have the same weightings of all this in here, even though GRCC holds the same stuff, it's just different weightings. So I guess that's maybe the best way to think about the difference between GRCC. It orients itself as a growth asset allocation, whereas EQCL or EQCC advertises itself as an all equity asset, not growth related in that regard. So I think that's going to be the difference, is GRCC, just different weightings, kind of the same stuff. EQCC will have the exact same stuff as EQCL, of course, with EQCL, just the leverage version. There's a second scenario, sort of a dark horse scenario, that I could see play out. Even though I think this is what will most likely happen. I don't see it happening any other way. But hey, it would be over in EQCL. They take out, of course, the non-covered call, developed markets, emerging markets ETFs, and they stick in EACC and EMCC. That would actually be kind of interesting too. If they didn't come out with EQCC, then I think this would be the de facto decision of what would get put into EQCL. For a lot of Horizons ETFs, when they came out with all of their index-based covered call ETFs, of course Global X Canada now, what we could probably expect from these covered call ETFs strategy-wise, probably in line with the rest of Global X Canada covered call ETFs, is 50% coverage on the portfolio, allowing for the other 50% to grow naturally, do whatever the market's doing. And probably they'll write calls at the money, maybe slightly out of the money. And of course, that's a good way to generate the much higher yields compared to other fund managers like, say, Harvest, for example. Just certainly a lot more aggressive. Harvest is usually 33% coverage, and they do also at the money, out of the money, but just less coverage. So you'll get a little bit more yield with Global X Canada. And again, EQCL is probably what happens with that one is probably the most exciting. The other two funds to talk about, there are these leverage versions of what's going to be leverage only versions of the index that USCC and CNCC and QQCC have as their underlying ETFs, right? Because USCC naturally is the cover call version of this index. So this won't have any cover calls on it. It is just leverage. There's already a cover call leverage version of this, and this as well being USCL and QQCL. So then we also get some cover call leverage versions of these two up here. So if you want to make a play on, maybe you feel good about the maybe India market, which will most likely be in emerging markets. Then maybe you go for the emerging markets cover call leverage version right there. Get a little extra growth from price action and maybe a little bit of extra yield as well. So lots to speculate there, but as always, if you like what you saw, then please do the cliche thing and hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.